The Top Source business stories live from the Sky News City studio. Amazon and Microsoft's dominance in the cloud market is to be investigated by the competition regulator. Shares of Metro Bank fall sharply as it confirms it's exploring options to raise hundreds of millions of pounds in new capital. Plus,
I'm on a journey to discover the human story of gold.
why Idris Elba has been exploring the history of gold. Good afternoon, this is Business Live with me, Ian King. Communications watchdog Ofcom has, as expected, asked the Competition and Markets Authority to investigate the public cloud infrastructure services market. Ofcom said that having completed a market study, it had identified a number of features in the supply of cloud services that make it more difficult for customers to switch and use multiple cloud suppliers. It noted that Amazon Web Services and Microsoft had a combined market share of between 70 to 80% in 2022. Google, which is their closest competitor, has a share of between 5 and 10%. Well, joining me now is our technology correspondent, Tate Tate. Tate, we've had a bit of reaction this afternoon from Amazon and Microsoft. What have they said?
So Microsoft has been quite accommodating of what Ofcom has said and said that they're going to be engaging constructively with the CMA's investigation. It is a fresh battle for them because they've just come off the back of more or less sealing approval for their acquisition of Activision Blizzard, still waiting on a final decision for that. But of course, this is the next hurdle, and tech regulators have been much more active, particularly when it comes to cloud market in general. Amazon have been a bit more prickly. I've got a line from their statement here. They've said, "We disagree with Ofcom's findings and we believe they're based on a fundamental misconception of how the IT sector functions and the services and discounts on offer." And their case here is that only a small percentage of companies and people pay for cloud services compared to hosting things domestically. But the point here is that cloud is a rapidly growing market. It's been around for some 20 years or so, but it's taking hold and set to grow at a much quicker pace. And it's much cheaper and easily accessible because anywhere you have internet access, you can access the cloud. So if you were to push the balance towards hosting things domestically, it'd be much more expensive for businesses.
Artie, thanks for that. Shares of Volution Group jumped by more than 10% at one point today after the designer and manufacturer of indoor air quality solutions reported forecast-busting results. The company, whose ventilation brands include Ventaxia and Manrose, reported a pre-tax profit on an adjusted basis of £65.1 million for the year to the end of July. That was up nearly 7% on the previous 12 months. Well, joining me now, I'm pleased to say, is Ronnie George. He's Chief Executive of Volution Group. Ronnie, great to see you this afternoon. Residential doing very well for you, particularly in the UK.
Yes, we're delighted. I'm delighted with the reaction in the share price today. Our residential ventilation grew 19% in the year, which was quite incredible. But I think what we've had is a couple of really important drivers. I think the most profound driver was around UK social housing, and a very sad story that in actual fact was commented on the news last November. Sad story about a little boy who died in a social housing property as a result of inadequate ventilation. And what we're seeing, quite rightly, is a huge response to that and strong demand, not just in public housing refurbishment, but also I think it captured the sort of imagination of the public around the importance of ventilation inside the home. And mould and condensation isn't something that you have to live with.
Yeah, are you able to keep up with demand?
Yes, absolutely. Absolutely. In actual fact, a couple of years ago, sort of through the end of the COVID pandemic, we made a significant investment in inventory and capacity such that we could service the demand. And, I said today with our results update this morning that we've got a company that has a relentless focus on great customer service and availability. So no concerns about keeping up.
What I find interesting, though, is that some people would say, hang on, you might be quite tied to the new build market.
Yes.
You're clearly not.
No, we are, and we're concerned about new build. And, of course, we know that we've got high inflation, interest rates and mortgage rates. But there's a huge regulatory driver in new build around what we call heat recovery ventilation. And it's the path to net zero. We should build our dwellings more airtight. And then the technology that we provide, heat recovery ventilation, is compelling in terms of reducing energy loss and reducing fuel bills. And we've seen really strong growth in spite of lower completions we're seeing strong growth around heat recovery ventilation.
Without getting too technical on me, what does heat recovery ventilation entail?
I remember somebody once described it almost as having your windows open all year without losing the heat. So sort of the dumbed-down version is that you have fresh air all year round, but you're maintaining the temperature without having to reheat the air. It's a great technology. It's been around for some time. We think we're the market leader in the UK, and house builders are adopting this technology through the regulatory drivers that are in place.
And what about the regulatory environment in the markets you operate in around the world? Are they headwinds or tailwinds?
Oh, they're absolutely tailwinds. I mean, the issue is if we are serious in local geographies about net zero ambitions, then I think the statistic is about 40% of all carbon emissions in the developed world comes from buildings. Of course, regulations drive new building development, much more carbon efficient, but also we've got a lot of existing stock. You know, we've heard about insulation in the past, and insulation is great, but when you insulate, you have to properly ventilate. Otherwise, you end up with all sorts of indoor air quality problems.
What about the competitor landscape? I mean, when you're seeing demand that you clearly are, there's going to be people trying to get into this market, aren't there? Yeah,
absolutely. And complacency is something to be very, very wary of. But look, we've got strong brands. You mentioned some of them at the opening there. We think we've got strong brands in our local markets. We've got great people who are really, very serious about providing great customer service. And I think the outstanding results that we provided in the year are a testament to the great work, across the group, 2,000 colleagues who really did drive the sort of healthy air, sustainably motto really well in the year.
And you did a couple of acquisitions during the year. Is there more to come on that front?
Yes, we did two acquisitions. In actual fact, right at the beginning of our new financial year, another acquisition in New Zealand. So we're delighted. We think of ourselves as serially acquisitive. 2.5 acquisitions in the 10 years since we listed. Great cash conversion last year. Strong balance sheet. Expect more in the future. That's absolutely part of the strategy.
All right, Ronnie, great to see you this afternoon. No, it's a busy day for your results today. I do appreciate you dropping in.
No problem. Thank you very much. Thank you.
Some other business news stories for you now. And shares of Metro Bank fell by as much as 29% at one point this morning, and trading in them was briefly suspended as it confirmed it's exploring options to raise hundreds of millions of pounds of new capital. The Bank of England's Deputy Governor said today it was an open question as to whether interest rates increase further. Speaking at a European Central Bank conference, Ben Broadbent said that there were signs that the bank's previous interest rate rises were now starting to have an impact on the economy. But Mr Broadbent, who was part of the small majority on the Monetary Policy Committee who voted last month to pause on interest rate rises, said demand in the economy had also been less weak than expected. The tobacco and vaping giant Imperial Brands said today that price increases would help it deliver full-year profits in line with expectations. The company, whose brands include Lambert & Butler, John Player Special, Gauloises and the vape brand Blue, said it had gained market share in the United States, Spain and Australia, which had more than made up for declines in Germany and the UK. There was no word, however, on Rishi Sunak's proposals to ban the cigarettes sale to anyone born after the beginning of 2009. Now, for centuries, gold has held a special status across the world, a precious metal coveted for cultural reasons, but also critical to trade and banking. Well, the actor Idris Elba has been exploring its history for a new documentary in association with the World Gold Council.
I'm on a journey to discover the human story of gold, how it shapes us.
We're going down!
And our world. It's a story I thought I knew.
Oh my God!
Turns out, it's far more incredible. That takes your breath away than I ever imagined.
Well, joining me now is David Tate. He's Chief Executive of the World Gold Council. David, afternoon to you. What was the motivation behind this film?
The main motivation was to try and demonstrate the good that mining does in situ for the communities, for the people, and also demonstrate the many uses of gold throughout the world that people don't know. We really tried to focus on the untold story. This was not about trying to be all-encompassing. It was to try and rebalance a somewhat negative perception for extractives. I come from a different world. I needed convincing myself, and I have been over this period.
OK, so you're trying to win hearts and minds, essentially?
Essentially, win back some hearts and minds and make people aware of some of the good that that the mining industry does do in communities. I've travelled there myself and seen it.
It's big budget production. It looks like it was quite expensive to make.
It wasn't cheap, but we decided that it was an important story to tell. And we found in Idris a fantastic presenter, someone who's bought into the story. He has links with Ghana, his parents, and he totally embraced it, especially the Ghana bit, of course. And I think he particularly liked the Bank of England bit, because that was a privilege.
Now, what misconceptions are there about gold itself that you're trying to perhaps address in this film?
Not particularly about gold, but about the manner in which it's extracted. And many people don't know that mines get filled in. The World Gold Council miners live to a very extreme standard, the responsible gold mining principles, and they can be ejected if they don't conform. And so it was an effort by me, having come from another world, to try and tell their story in a very coherent and enjoyable way.
What sort of things would a member have to do then to be excluded from the council?
Not comply with these principles in particular, and they apply to all forms of uses of chemicals, power, regard the way they manage their staff, safety. There's a whole variety of things, and it's quite exacting, and they're audited to that effect.
And by the council itself or by external auditors?
External auditors,
right.
Yes.
And how frequently would you audit?
It'll be on a rotational basis, but the principles were introduced in 2021, and they're going to be, the first round of audits are going to be completed in the middle of this year.
OK.
Middle of this forthcoming year.
Is it too early to sort of speculate what you might find?
No, I think most of them are compliant. In fact, I would say, to my surprise, having come from a different rates and FX background, I've been pleasantly surprised by just how ahead of the curve, for want of a better expression, the mining community is, and in particular my miners, because, frankly, they're under so much scrutiny they have to be. And that gave me a great deal of satisfaction when I joined, because, as I said, when I joined, like most people, I had this inbuilt feeling that I needed to find out myself.
As you say, you come from a rates and FX background. I can't resist asking you a market question. I mean, the price of gold has sold off quite sharply over the last 4 months. We're back at levels seen at end March now. What's behind that? Where do you see supply and demand dynamics right now? Well,
I joined the World Gold Council at the absolute low, and it's gone all the way up to 2000, which is all about me. Have to be all about me. But it's come down recently from 2000. I think largely the bear steepening we've seen in yields recently and the run-up in the dollar has produced this. If you look at the amount of speculative flow, I think that's all been washed out of the market recently. I would personally, as an ex-trader, look at this and say it's held up remarkably well, given the pressure it's been under in a classical sense. I think it's been supported by a combination of central banks, who have still been buying even this month, I think 77 tonnes alone this month, and bar and coin demand, which I think is a reflection of geopolitical tensions and nervousness. Basically, it's on the highs, in my opinion, and no one has the position left, and you generally know where that means.
Yeah, absolutely. David, got to leave it there. Good to see you this afternoon. Thank you.
Pleasure.
Still to come here on Business Live, we'll have a look at how the markets have done this Thursday afternoon. Don't go away.
They've pushed the protesters further back here. There's around 200 or 300 still remaining.
I'm Dan Whitehead and I'm Sky News' West of England correspondent.
This van goes onto the streets of Plymouth 7 days a week, 365 days a year.
These facilities at the moment are a lifesaver. It's all we've got.
From fishing communities to bustling cities, we spend every day reporting from across the region, hearing from people who have real stories.
I'm gonna have nowhere to live for about 3 or 4 months.
There are still people inside the properties here.
They're coming from the epicentre of what is now a global health pandemic. We were seeing and speaking to young women who were selling themselves right on the high street. It was desperately sad, and the fact it was happening right in the heart of this community. Before Brexit, these oysters were being exported to the EU, but the trade stopped overnight.
What's your feeling about the future then?
Blake, might all be finished, I don't know. 5 of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.
Slide minutes. Slide better. Fly Emirates. Fly better. Thank you.
Well, the bond markets are a little calmer today after the turbulence earlier in the week, although yields, which obviously rise as the price falls, on a number of government issues remain close to the multi-year highs hit earlier this week. On the equity markets, stocks in Europe have finished in mixed territory there. The DAX in Germany obviously off by a fifth of 1%. The big talking point among individual stocks in Europe today has been Alstom. The French train manufacturer has slumped by 38% after warning it will suffer a negative cash flow this year. Well, here in London, the FTSE 100 has finished up by just over 0.5%, with gains for consumer stocks leading the way. The leading blue-chip gainer in percentage terms was Imperial Brands, which I mentioned earlier in the programme on that trading update. The share's up just shy of 4%, while Tesco remains wanted after yesterday's strong results. The shares there 3.5% to the good. Among the leading fallers, well, BP and Shell have come off on the back of a lower oil price. More on that in a moment. And on Wall Street, well, that's open to the downside this afternoon on news of a modest rise in new jobless claims last week. Talking points include the frozen food specialist Lamb Weston. Its shares are up 8% after it raised its annual profits forecast. On the foreign exchange markets, well, the dollar's been taking a bit of a breather after its gains this week. Sterling up 1/3 of 1% against the greenback, unchanged against the euro. Single currency likewise up 1/4 of 1% against the dollar. As for the oil price, well, it's continued to drift after yesterday's sell-off. It's currently back at levels seen at the end of August. Barrel Brent crude will currently set you back $84.12 a barrel. That's off 2% on the session or so. Well, joining me today is Alex Funk. He's Chief Investment Officer at Schroeder Investment Solutions. Alex, good to see you again. Very, very volatile week indeed for bonds. What's driven it?
I think we're back in this territory of good news is bad news and bad news is good news. And unfortunately, every time I come on the show, bond yields have taken another leg up. I think this time is slightly different. So when we discussed bond yields a little while back, I think the market is now looking for higher term premiums. So what are they saying? They're saying there's this ongoing deficit in the US, there's continued spending, there's a strong consumer demand, there's potentially higher inflation, the Fed is talking about higher for longer. I want to be paid more for owning bonds longer term. And we saw that, the bond yield move up to 4.88 on a 10-year. And that's tremendous, right? That's sort of pre-GFC type levels and the movements that we've seen. And we can see that global bond markets have reacted in a similar way. So even in the UK, 30-year bonds north of 5%. And so there's definitely the shift up to say, I need to be paid more for holding these securities over longer periods.
What about the dollar? I mean, is this strength in yields lifting the dollar as well to an extent?
What's creating the excitement around the higher interest rates, right? Higher interest for longer periods of time creates sort of a demand for the dollar as well. And I think that's really been driven some of that upside performance there.
OK. What about the relationship with equities? Obviously, they tend to move in opposite directions with each other. That relationship hasn't been as rigid this week, really.
So what you find is in periods of high inflation and high rate change delta at the same time, you have that correlation break down, and that's what we saw in 2022. And so I think over September, the markets took a little step back and saying, well, if rates are going to be much higher for longer, I need to be paid more for that. And then the equity market goes, oh, I'm nervous what that means for profit margins. I'm nervous what that means for employment. So I actually don't want to pay that much for your stock anymore. Some parts of the US market has rallied quite aggressively this year. And so I think the market took the opportunity to look for a reason to take profits on some of these positions and reset that. I think where we're going to now, though, is, we continue to see positive inflation prints. Potentially, we've seen the last hikes in the Fed and the BOE and even the ECB. And now all of a sudden these tech stocks are a little bit more, appropriately priced since the pullback roughly 8% in the S&P over the last 2 months. We might see some sort of buying of the dip, I think, in the next couple of months.
Well, and particularly as we're about to enter Q3 earnings season, if we get some positive surprises there.
And it's definitely looking positive. I think even from a GDP perspective, Q3 and everything is pointing to Q3 being quite positive, at least on a quarter-on-quarter basis. I think as we move into Q4, that's when the true litmus test comes through, right? So interest rates do bite at some point, and I think there is still risks to the slowdown in the US. We're seeing, higher costs of lending through higher rates. We're seeing depleted savings, so this idea of excess savings is definitely coming off. And then the one thing we mustn't forget is student debt repayments, right? And we do know that the students like to spend, and so the combination of that, I think, does create some headwinds for a US economy. And so we sort of think there'll be the slowdown period coming in the US, but by no means this deep recession that everyone was forecasting at the beginning of the year.
So that's a multi-asset investment. How are you looking at the fourth quarter in the main?
So the way we've positioned from an equity standpoint is to keep exposure to quality assets, so businesses with defensive models, consistent cash generative, strong consumer brands that continue to spend during that period of time. I would have told you a month ago that we'd still be a bit cautious on interest rate duration, so adding to longer dated bonds. But again, when they've moved this far, it just creates much more attractive opportunities. I think within the high yield versus investment grade space, from a fixed income perspective, we'd still prefer investment grade. Yields on offer are attractive. Ultimately, if we do think the economy slows down, these companies should be better insulated than high yield. Plus, we know that maturity wall in high yield is approaching as well. So I think that's how we sort of position the portfolio. We're capitalizing on some of the momentum in Japan as well, which is there's always somewhere to invest in a multi-asset portfolio.
Yeah, absolutely. Just a bit of breaking news we got on the markets here. We've heard from GSK. They're going to sell 270 million ordinary shares in Haleon, equivalent to approximately 2.9% of Haleon's issued share capital. I know you don't really like talking about individual stocks, but Haleon is a pretty solid company. Interesting to see GSK offloading a bit now.
Well, I think it's all about capital raising and protecting your balance sheets as well, right? So if we roll back a couple of years, a lot of companies termed out their debt, right, at ultra low levels. And what we're seeing now is clearly some companies acknowledging that interest rates do bite and the effects in the economy. And so we're just seeing some of the effects off the back of that. And I think you'll see more of that coming forward as well.
Just to go back to what you were saying a moment ago about Japan, the Nikkei has been the best performing index in the Asia-Pacific region this year by some distance. For how long can that continue, that sort of outperformance?
So we have to think about the reasons why that's happening, right? So Tokyo Stock Exchange comes out and says, make us more investable. Your price to books are lower than one. You're sitting on hoards of cash. How do you return some of this back to your shareholders, right? And so there's this idea that value companies should try and move their price to book values up, and markets go, this is fantastic. So we price that in ahead. So I think there's that fundamental change, which is our initial rally that we've seen. But I think more structurally, that creates a more investable area. Plus, you finally have a bit of inflation. We mustn't forget, equities like a little bit of inflation. They don't like lots of inflation. And so if Japan all of a sudden can generate some inflation, pass some of that cost on to consumers, maintain the wage cost, i.e. because that's the largest input cost for most companies, that becomes quite interesting from a cash flow perspective. And I think the market is starting to realise that.
And you've got the yen at a year's low against the dollar as well. So
from an export aspect, that's helpful. Yeah. Obviously, as a sterling investor, that goes against you. And so I think you have to weigh up the benefits of currency depreciation, how that returns back into cash flow, but ultimately, if I'm investing in pounds, what that means for my exchange.
All right, Alex, got to leave it there. Good to see you again.
Great
Thanks for joining me.
Thanks, Ian.
Well, before I go, a bit of breaking news to bring you. We've obviously been speaking about the situation at Metro Bank today, which the shares fell by getting on for 29% at one point today. Our city editor, Mark Kleiman, broke the story last night that he was exploring capital-raising options. He's got some more on that. Mark, what have you heard?
Yeah, that's right, Ian. I understand that in the last few days, Metro Bank has been sounding out potential buyers for a £3 billion chunk of its mortgage book. Now, doing this would free up capital, strengthen Metro Bank's capital position if it was able to attract a robust enough, big enough price for these assets. Now, I understand that Metro Bank has been sounding out big high street lenders, the likes of Lloyds Banking Group and NatWest, to gauge their appetite for buying this chunk of its mortgage portfolio. It's not clear at the moment whether either of those or indeed any other banks are interested in acquiring these assets. So I would expect them there to be significant interest in, but at the moment not clear what price anyone would be prepared to pay. And as you pointed out, this would form part of a broader capital raising exercise, the one we were talking about over the last 24 hours, which includes a share sale of £100 million or more, and a debt and accessing the debt markets to refinance a £350 million bond, which falls due next year. So this is all an unfolding, emerging story, but we can say now for sure that Metro Bank has begun sounding out potential buyers for this £3 billion chunk of its mortgage book.
Very briefly, Mark, how do you assess the quality of the mortgage book at Metro Bank?
Well, my understanding is that these are high-quality mortgages, Ian, which is why I think there will be significant interest from potential buyers. But given that Metro Bank is becoming an increasingly distressed seller, there's no guarantee that it will be able to attract a price that ends up improving its capital position.
OK, Mark, good to talk to you. Thanks for that. That's it from me. I'm back again with Business Live tomorrow morning at 11:30. Hope very much you can join me then. Of course, it's a big day in the markets tomorrow because it's the big data release of the month. The non-farm payrolls figures out of the US tomorrow lunchtime. We'll have all the details for you on that roughly this time tomorrow. Hope very much to see you then. In the meantime, do stay tuned. Up next, it's Mark Austin with the News Hour. Thanks for joining me today. Cheerio.